Hello, Jim here. I've been able to make some really good extra income the past 2 months running two option wheel strategies. They're both slightly different. The first one is what I call my monthly cash secured put strategy. I run typically four cash secured puts on less expensive stocks, and I typically only do one contract. What's really nice about this strategy is that you can do it with really small accounts. Now, the other strategy, I'm working vertical put credit spreads, and I'm trading them more often, more like every week to 2 weeks. And they're on slightly more expensive stocks. So that's why they're vertical put credit spreads versus just cash secured puts. But combined, these two strategies make some really good income. So that's what I'm going to share with you today. I'm going to share with you how these both have worked out over the last 2 months and how you can kind of make modifications to fit your own portfolio. So stay tuned. I think you're really going to enjoy what I have for you today. Let's jump right in. Now, this is my monthly cash secured put strategy. I did mention I only do one contract, but this last time I did do two contracts for several of the positions, mainly because they were very, very inexpensive. So at first, back in October, I did monthlies. The first trade was 10/11. They were all expiring on 11/15, again, picking the monthly. And all of these were around a 35 delta. So I did one in Chewy, one in Square. I did do two different contracts with Twillo, one at 62.50 and the other one at 65. And then I did do one at Pens. Now, the reason I did that with Twillo is I already had one that I had put in place back on 9/27. So I used that one versus doing a brand new one. Now, Chewy, Square, and both the Twillo positions all are either closed or expired. And then even for closing the Twillo, I spent very little money. And they all of these trades had really nice ROIs. I mean, 43, the highest was 69%, and the lowest was right around 26%. And then overall, I brought in with this put premium right around almost just a little bit shy of $1,000, which was really nice. Now, I did get a signed pin, so I opened a covered call. I did have to wait a few days. Pins, which is Pinterest, had some bad earnings and they dropped into the mid 20s, but they've rebounded since then. And I was able to sell a covered call, brought in 58.32 for it. And then I opened up new positions in HIMS. I did two contracts. Again, I mentioned in the beginning in the intro that I only did one, but I did two with HIMS because it was only a $20 stock. I also did Bluebird. Also did two for that one, mainly because I really like Bluebird. They have really good return on investment. If you don't know who they are, they're the yellow school bus company. All of these are expiring on 12/20. They're all, I believe, still outside the money. I also did one in FCX, which is a mineral-based company, so a little bit different, but again, not overpriced. All of these had around a 30, 35 delta. I did go a little bit lower with HIMS of a 27 delta. And then finally was Fiverr. I did do one contract on Fiverr at $27 and again brought in some pretty good put premium, 853, and you combine that with the call premium, it was again just shy of 911. And again, all of these had really good returns. So the lowest was the call premium, of course, with only $58 coming in. And then the others were anywhere from 61%, 62%, 32, 45. Oh, don't want to copy those by accident. So all of these worked out quite well. If I look at the summary of how I did, I brought in total income of $1868 for the 2 months. I also brought in interest of $192, and this is actually true actual interest of what Fidelity is currently paying. So $192 for the 2 months. Total income, I brought in $2,060, and then monthly, if I divide that by two, it's right around $1,030 for that month. The yearly income would almost be a little bit higher than 12,362, and the total capital required for this kind of of a strategy was 24,342, and that's just pulled from the column over here, where it's pulling the specific for the required capital for each trade. Now, what that is on a monthly ROI is 4.23%. And then overall for the year is 51%. So it worked out really well. All of these companies I like. They typically fit the criteria that I use to pick companies. They have to be profitable. They have to have fairly good profitability. They also have to be minimal with debt. Some of these have no debt. And then they also have to have some growth and some pretty good management where they're growing and they're growing in a healthy way. Now, what have I learned with this strategy? Pins is assigned and then sold covered call. Call premium was not as good as original premium. So in my original video, when I looked at these, and it was, I believe, an up day, the call premium was a lot higher at that time. When I actually sold the pins covered call, it was definitely less. These are all real numbers. I could do one more trade, but I have had a tough time finding good candidates. So it did take me quite a bit of time to find some good candidates for this. And then this, I must have deleted. Let's put pins back in. And then not all would be assigned, so I can do 5 contracts. Once assigned, run call, and then repeat. So rinse and repeat. That's the whole idea with the wheel strategy. Pick different companies due to some stocks becoming very pricey. And we talked about that. Twilio and Square just shot through the roof. Now they are coming back. And what I found with a lot of these companies, they'll go way up or they'll go way down. And then they typically will drift back to the mean or, so over time, if they earnings don't look good, they typically will come back up after being hit really hard. And the reverse is true. If they have good earnings, they shoot way up and then again drift down. This shows things change and you cannot necessarily rinse and repeat. It is more complicated than that. So again, I would have liked to have done the same trades, but I had to look and find some other opportunities. Twilio and Square became too expensive because I only had, in this case, I was looking at around a $25,000 account. And they became too expensive. I couldn't do 3 or 4 trades or 5 trades. This is a small strategy in my overall plan. So I do a lot of different strategies. I don't stick to one type of strategy. So I have 2 to 3 different types of wheel strategies. I also have covered calls, vertical put credit spreads, iron condors. And I've talked about this in previous videos. I also want to add in some additional strategies. My bread and butter is covered calls and vertical put credit spreads farther out with a 15 delta. And I will continue to do those just as I continue to do trades like this. And most of the returns I got with the planner, now if I had a financial planner for many years, I could not get these kinds of returns. I was always surprised when I would meet with the planner. It was always around 6 or 7% is what, and I was paying him around 1%, so it wasn't much at that time. So you definitely can do better, and you don't have to do many trades. If you only went with 2 of these trades each month, you would still probably be earning on a yearly basis 15 to 20%. And you would, if you have a $10,000 account and only did, say, pens and hymns, you probably, again, could make 12, 13, 15 on a yearly basis. So this is the monthly cash secured put. Next, I'm going to talk about, and it's just below this, I'll talk about the trades for my weekly, it's almost like every other week, vertical put credit spread wheel trades. So hold on, let's jump into that next section. Okay, now this is my other wheel strategy. It's what I'm calling my weekly, and it's not quite every week. It's maybe every other week. Where I'm running spreads, both put spreads and call spreads. And on more expensive stocks and stocks that typically have better option premium than the cash secured puts that I shared earlier, or those particular companies that I shared. So these are more expensive. They typically have more expirations, more volume. They typically have pretty good weeklies too, with quite a bit of volume and open interest. So I originally did these at the beginning of this month on right around November 12th and 13th. I did 3 different trades. One was a paper trade in Qualcomm, and I did 2 contracts. I also did 2 for the paper trade, and I did a 190 for the Micron, and I ended up rolling it, so this position's actually closed. You can see down here I actually rolled it. So the first time I put it on, I made 323. It was like a 704% return on a yearly basis, primarily because it was a 10 DTE, so expiring in literally 10 days. So that just blows up the ROI. And you'll see over also on the right where I've got the assignment allowance. I'm not showing it here because again, these are closed, but you can see down below, this is for 200 shares. That's what it would cost minus whatever the premium. And you need to have that available if you are assigned. I also show the required capital, and that's the spread minus the premium. So, 2 contracts at $10, 2,000 minus the 310 is how you come up with 1686. Same thing down here. These might be slightly off, but no, I think they're pretty accurate. So I did both of these. I was able to roll them on 11/21. So literally a little bit more than a week later, 8 days later, I was able to roll them, and I rolled Micron. I kept the same strikes in both cases, and I moved the expiration to 2 weeks out, 12/6. At the time, I think it was the premium wasn't good enough to just go to the next Friday. These are typically have been on Friday expirations for the weeklies, but I brought in almost as much as I did originally, 314, and that's also when you subtract what it cost to close for the original one. And then I made 230 on the LRCX. Similar trades, both expiring on 12/6. This is a smaller spread, a 750 spread, 72.50, 65. Made 227 on that. And the previous time I had made 243. So in both cases, I made a little bit less, which is probably the difference on buying back the prior positions. Again, when you're rolling, it's just literally closing your existing position and then opening a new one. And then you bring in enough premium to cover what it costs to close. And in both cases, I was able to bring in quite a bit of premium. In this case, it was 474, again, 10 days to expiration. So all of these were 9 or 10 days, and then this was 10 days. So I could potentially do, we're pretty much done with this month. So, but potentially in December, I could maybe do 3 of these, so set it, roll it again, and then possibly roll it 2 more times. Now, the total amount that I've made over this month is $1444.58. So that's all the put premium. And then down here, you can see total put income is $1444.58. Again, interest, this is just for 1 month, and this is the actual interest amount from Fidelity with what they pay. And then the total monthly income is $1567.95. And then the yearly income would be $18,815.44. And then the total required capital is $8,055. Again, that's the spread. So, two positions with 2 contracts, and that's how that comes up. And then the total assigned capital, which is just these 2 values over here. We'll go back over just these 2 added up. It's actually 33. Why is that? Oh yeah, 33. 33,956, which turns into a monthly ROI of 4.62. So, and then a yearly return on investment is over 55%, 55.41. So, I mean, that again, just doing these trades in a $33,000 account, I mean, again, you could potentially do really, really well with just one of these. You wouldn't necessarily have to do both of them or all three of them. I did have again the paper trade, which I did in Thinkorswim. So what did I learn with this wheel strategy? Is spreads are most profitable trades, and it also relates to these companies. These are some of the companies that have really good premium compared to some of the cash secured puts that I shared earlier in this video. And then if I filter my September monthly, then so if I look at my monthly and I look at my vertical put credit spreads and I just calculate what my return is on that, it's just on those is typically right around 5%. So, and that's what we're seeing here. This is really close to 5%. I could do a few trades like this to significantly increase my monthly income. And, I plan to continue to do this, and I might even do a few more. I may do more contracts if these continue to do well. And I'm really curious on the call side when they do get assigned to, when I sell calls pretty close to the money, it should be some pretty good premium. When I've looked at it before, the premium on the call side can potentially be higher. It changes every day. So it may be or it may not be. Using a 35 delta for this kind of trade, the stock needs to be priced right and not run up like APP, Shopify, Palantir, and NVIDIA. And all these originally, since we rolled these, I didn't look at the delta, but they were all right around the 35 delta. The call premium, again, the call premium can be really good. It can be double the put premium. Now, it may have just been that day, so I don't know. You truly don't know until you actually make the trade itself or you roll the trade or it gets assigned and then you sell the covered call spread, to see what the numbers really look like. The long put can be a hedge for major market drop. In most cases, they were really cheap. So in a sense, what will hit you with the wheel is if you do get a significant, like a black swan event, and the market drops significantly. By doing this with spreads, you're a bit more protected. So you're limiting how big your loss would be. So a lot of times people will say, well, maybe you'll run the wheel for 8 or 10 times, but then in one major market drop, it could, you could blow all your profits up to that point. But again, by using spreads, you potentially limit that kind of a risk. And also do call spreads when assigned. You might do a smaller spread since the premium is so good. So again, what I tell my members, and if you're curious about my memberships, there'll be details in the description. I have 3 levels. The memberships are growing. The Discord's gotten really active. People sharing their trades, people talking about Bitcoin. I've been adding more channels. It's just become very active. So take a look in the description if you want to learn about those. And as always, please, hit that like button and subscribe. So this last piece here is just kind of a combination of both. And if you're wondering, it's the same spreadsheet. But this is, so the total required capital, and this is 2417. So this is adding just a required capital. And it's less because of the spreads that I'm using in this second strategy. The total assigned capital would be just shy of 60,000, 58,298. And then if I combine the monthly income here with the monthly income here is how I come up with the 2,598. And these are actual trades. These aren't, these are trades I've made, and I've shared with my membership. Every time I post these, I share details that this is my monthly wheel trade. This is my spread wheel trade, weekly spread wheel trade. Again, not necessarily weekly, but I do like to word it that way. So total income of 2,598 on an investment or a capital of just shy of 60,000. And it's like a 4.46% monthly ROI. So this is the highest, 4.62. This one was 4.23. But you can really get an idea of what you can do with these small accounts. Now, what I typically do is I upload this to my membership, and then I provide this spreadsheet. I also will do cut and paste into the Discord if people are asking specific questions. I do have an area for small accounts where people can share their small account trades or can ask questions about, can I potentially change this other trade and use it in my small account? Plus, I have a lot of experienced traders helping new traders, so it becomes pretty entertaining. I get a lot of notifications literally all day. It's like my phone is being hit pretty hard with notifications from communication in the Discord, people having conversations. So that's what I wanted to share with you guys. Let me know what you think. Are you doing a strategy similar to this, or is there a way you would do it differently, or you see an issue with the way I'm currently doing it? Please leave a comment. I try to answer to them all within 24 to 48 hours. So that's what I wanted to share with you guys. I did want to say, have a happy Thanksgiving. I hope you're able to have a good time and spend time with family, and be thankful for all the things that have gone right recently. I don't know if you feel like I do, but it definitely feel good about what's coming next year, and hopefully we'll have an even better market than this year. So thanks again for taking your time to watch, and I look forward to seeing you next time.